Together, at least we can strip off away from the wreck we made. Then only for a minute, I want to change my mind. 'Cause this just don't feel right to me. I wanna raise your spirits. I want to see you smile. No, nothing's hard to see. No, nothing's hard to see. Lately, I've been thinking, I want you to be happy. I want you to be happier. So go, I will go. So I'll go, I will go. Lately, I've been thinking, I want you to be happier. I want you to be happier. Even though I might not like this, I think that you'll be happier. I want you to be happier. Then only for a minute, I want to change my mind. 'Cause this just don't feel right to me. I wanna raise your spirits. I want to see you smile. Look like these are hard to look like these are hard to me. Lately, I've been thinking, I want you to be happier. Well, good morning, kings and queens, and thank you so much for joining us this morning. You have now officially joined the PMs of the City, Equity Resources, Inc. Home Buyers First Workshop, our 101 step. And this morning, I am joined with one of my favorite kings because he's important in this home buying process. He is the king that is going to get you pre-qualified. And so a lot of times then we come together and you're thinking about buying a home, even for myself as I'm going through the process as we speak, it seems scary. So we thought we would have this beautiful, nice, comfortable workshop, a nice candid conversation so that we can explain to you how easy it is to become a homeowner. And when I say easy, I mean the process, the steps, the help that is along the way. So I am Shanetta Malkia. I am the managing partner for the PMs of the City. I'm the director of property management. And so I'm also now one of the new realtors with Ulubio Realty. And I'm thankful to join Gabriel Goodwin. I am in the process of becoming an actual associate broker with Ulubio Realty, and I'll become the principal broker with the PMs of the City. So without further ado, I'm going to turn it over to my king, my friend, Adam. And because I don't want to mess up Adam's last name. So Adam, I'm going to turn it over to you and let you go ahead and introduce yourself to the kings and queens joining us this morning.
Well, good morning, everybody. My name is Adam Trzybinski, and I know that is that's horrible to try to say and read at the same time, so I totally understand that. No, my name is Adam Trzybinski. I'm a mortgage specialist with Equity Resources. Joining here with Shanetta today to kind of give you guys a layout from beginning to end of how this process works. How do you obtain a home? How do you pay for that home? It's very, very common for most people to not have any clue about the mortgage process because you've probably never dealt with it. So most people don't ever think about it until they have to deal with it. And that's why you have folks like us to help you through that.
Yes.
So that is something we're going to cover today. This sort of the importance of the pre-qualification, how we go about these processes, and how to get these steps started. So
that's awesome. Adam, you were speaking just a moment about the pre-qualifications. And so one of the biggest things that people always have this fear of is their credit. And you gave me an amazing flyer that just really spoke about credit and what that credit score means and what, loan officers and financiers are looking for in trying to pre-qualify a person to purchase their home, whether it's their first home, their starter home, or their dream home, as they may be, upgrading to a larger home as the family is expanding, or they just want some more space. How important is the credit score when thinking about purchasing your home and starting this process?
The credit score is going to come into play in a couple different ways. The biggest thing is going to be, it's going to dictate the rate that you're able to get for the home. Okay, that's going to be one of the biggest impacts that credit score has. But it's also going to impact things like the amount of how much mortgage insurance might be, how much you might need in reserves, meaning, how many months of payments you might have to have saved up. So there are numerous things that the credit score will impact. Now, the one misnomer, though, is don't think that you have to have a 740 credit score to buy a home. Now, given if you do, that's wonderful. And
wait a minute. So you said we do not have to have a 740 credit score to purchase a home?
No, a lot of times people think that you have to have these insanely high credit scores, 740, 760, 800s, that you don't. I mean, those scores are fantastic and you're going to be able to get the best rates and things like that. But having a lower score does not necessarily mean that you cannot purchase a home. We can do mortgages with credit scores all the way down to 620 at this point.
Awesome.
Outside of normal, outside of the COVID realm here, we're actually able to go a little bit lower as well, down to normally about 580. But currently, with our current COVID situation here, 620 is going to be where we start out. But you don't need to have, above 800 credit scores to buy a home. That's one of the most important things to really get across. But credit score is going to drive just about everything in the transaction. It's a hugely important number, really, for not even just in home buying, but in every aspect of your life it can come up. So usually as part of the mortgage process, what I'll do is dive in and do a full review of the credit report to see if there are any opportunities to help increase and make sure that there's nothing on there that shouldn't be.
That's good. That's good. So Adam, when you think about the credit score, and you said you're able to get people sometimes financed as low as 620. What does that process look like for individuals? So you have different credit consumer agencies that help individuals clean up their credit. When the person is pulling their credit report, how do they begin to tackle that? Do you work with them and assign them to, or make some recommendations or referrals to agencies you've worked with if they know they need to clean up their credit? Because, we work with individuals, even with the rentals, and we ask for a person to have a 650 credit score to be automatically approved for rental. And so we do accept individuals that have credit scores, and I've seen some credit scores as low as 400. And so people say, well, Shanetta, I want to purchase a home. Adam, I want to purchase a home, but my credit score is at about 450 right now. So what do I do? And is it realistic for me to say that I can purchase a home within 3 years?
Well, I'll tell you, it really all depends. So credit scores are sort of odd animals. It's not a simple thing to say, okay, if you make, X amount of payments on time for this length of time, then you're guaranteed to pick up this many points. It doesn't work that way, unfortunately. Every type of credit, every different what we call trade lines, that's the different line items on your credit report. Each one of those could be weighted differently. So let's say that you made 6 months of on-time mortgage payments. That's going to carry way more weight than if you made a year's worth of on-time credit card payments.
That makes sense.
So yeah, there is sort of a hierarchy to it. So mortgage loans would carry more weight than auto loans, which would carry more weight than installment loans, which carry more weight than credit cards, so on and so forth. So there is sort of a cascading tier of weight to it. So there are certain things that you can impact that will have a much faster impact on your score. So as far as the process goes, what I always tell people when they apply with me is I'm going to guarantee you one of two things. Okay. Either A, I'm going to get you pre-approved for the home, or B, I'm going to get you on a roadmap to that pre-approval. Okay, so if we're not quite there yet, I will provide you the sort of framework that we would follow to help get you there. So whenever somebody does an application with me, I will guarantee one of those two things will happen. So we'll either get that pre-qual done, or we're going to get you the information and to put you on the path you need to get to your pre-qual.
That's awesome. That's really good. That helps a lot in regard to the credit, because, I think that's where people get stuck, and some individuals say, I'm just never going to pursue home ownership because I don't know where to begin in cleaning my credit up, or I don't have any credit, So some individuals they don't have credit, and they've never really utilized their credit. So what do they do to establish credit to be able to purchase a home?
All right, so I'd say let's start. We'll take the lack of credit here. We'll put that just aside. That's a whole nother question. So let's put that aside here for just a second. Oh, excuse me. But so when I would have, let's say we have somebody applied that had the lower credit score and wasn't quite ready to do the pre-qualification, or wasn't ready to pre-qual yet. So at that point, what I would do is go through the credit report line by line and see what could have the most impact in the fastest way. So there are all sorts of different ways that we can sort of maneuver through a credit report to have some impact on it. Going through credit repair services, that's always sort of a last option as far as I'm concerned, because what credit repair services generally do is what they do, you can do also.
Yeah.
They have the ability to contest charges on your credit report. They are going to, put in requests. They're going to update some things on the report, but a lot of the things that they do, you can do as a consumer also. So not always the best option, and they also tend to be fairly expensive.
Yes. Consumer Credit Services. That's the one that I know was always seeing their commercials saying, call us, we can help you, we'll negotiate, we'll get you down to pennies.
And generally speaking, there's a couple different things that happen here. One of the ways that they sort of fix the credit report and help you get things paid off is a lot of times they're going to tank your credit report first. So when you first start with a debt consolidation or a debt management company, generally things are going to get much worse before they get better. Okay. Because what they will tell you at the point that you sign up with them, they will tell you to stop making your payments. Wow. So you then start accruing late payments. Now, it gives them a better leg to stand on from a negotiation standpoint, but to give them a better negotiation standpoint, you have absolutely ruined your credit to do that. So you're paying them for the privilege of ruining your credit.
Wow. Okay, so I've messed up my credit on my own, but now I'm gonna pay you to add to it. Okay.
Right. You're paying them to help you ruin your credit. Now, given it will be fixed eventually, but if they happen to settle for less than the account amount, those are things that have impact over time. So you're going to have a lot of lates on your credit report that are, again, they have to fall off. The time is the only thing that can help get rid of those. So we want to avoid lates whenever possible. Okay, so whatever roadmap that I would give you for a credit report would not involve missing payments and ruining your credit further.
Exactly.
That's a big part of that. So that's generally about, I'll take about 30 to 45 minutes to review a credit report and write up a list of options and goals that we would want to accomplish. And then once I go over that with a client, I then get on to a follow-up with them. So, like I say, here's what we need to accomplish in the next month. I'm going to follow up with you after this month. Here's what we need in the next week or two. We'll set a time to talk after that. But as long as people are still willing to put in the effort and move forward, I am willing to work with them as long as it takes. I want to put people in homes as badly as possible.
So Adam, you said as long as it takes. So give us an example, worst case scenario. What has been your longest term in trying to help a client get financed, and what was the challenge?
Okay, so right now my current longest project, I think I've been working on one for about a year and a half.
Wow.
She started out in the 440 range.
Okay.
Had gone through a divorce and all kinds of just absolutely
life happened. Yeah.
And that's another thing to understand too, is that, having issues with the credit or having what you call bad credit doesn't necessarily mean you did anything tremendously wrong. You didn't, you didn't hurt anybody or anything. These things can happen through no fault of your own. Things like life events, divorces, illness, those types of things can have an impact.
COVID can have an impact. How about that?
COVID is a huge one right now. So having issues with your credit does not in any way, shape, or form reflect on you as a person. I want to make sure everybody understands that.
I love that.
Because people do actually get emotional about their credit. They look at that as an identifier of themselves, and you have to take it with a grain of salt. Okay, not everything is nefarious and it was done for evil purposes. So
I love it. And I think another point for everybody to keep in mind, even when you're going through this process, not everybody that has great credit today had great credit before. And so, we all had to start somewhere. And I think that a lot of times the lack of financial education, financial literacy is missing. So if we had those fundamental tools as youth growing up, start teaching our youth about some of these things, the importance of credit. Once you learn it, then it puts people in a better position so we can have generations buying homes, opposed to the individuals that you think are just the only persons buying a home because you can buy one too,
Absolutely. And that actually sort of leads me into the other point that you had made there, and that was about no credit. Yeah. What do you do if you have no credit? So this would be great for anybody that's either in a rebuilding phase, you know, like somebody who's coming out of that divorce and needs to rebuild their own credit, or people that are coming out of school, you know, you're 18, you need to start working on your credit. So one of the biggest misnomers out there is that you kind of start with a good credit score and it can only get worse. That is not how it works at all. You have to, just like anything else, you have to build good credit. Good credit takes time and it takes consistency. So you don't just start off with an 800 and that's yours to ruin. No, you do have to build up from the ground up. So there are a couple of different ways that you can do that are very, very easy ways to do this. The first is going to be a secured credit card. Okay. A secured credit card is usually offered by credit unions and local banks, and it is guaranteed with your own funds. So what would happen is you would go into a bank and say, I'd like to apply for a secured credit card. And they'd say, okay, with a limit of $300.
Yes.
You would deposit $300 on hand with that bank. That becomes your credit amount, more or less. Okay, so you're guaranteeing yourself. That's why these credit cards are very easy to get. And then what you would want to do is just make 1 or 2 purchases with that card every month, pay it off in its entirety, rinse and repeat. And you want to do this every single month, whether it's a tank of gas, whether you buy your groceries with it, at least 1 or 2 purchases that you pay off every single month. Because what you're trying to do when you're building credit is you're trying to show that you can make payments over time for a long time.
Exactly.
That's what a credit score really is. It shows that you make your payments on time.
You're responsible? It says we're responsible?
Exactly. Well, responsible.
Give or take a little bit.
So secured credit card, good way to go about that. Secured loan. This is only offered usually through credit unions, but so you can, same type of thing. You're going to go in there, it's guaranteed with your own funds. You're drawing on it almost like a line of credit. It's just a little different product available through credit unions. One thing that you can actually do today, right this second, right as soon as we finish up with this seminar, you could do to start helping your credit today, is a program called Experian Boost.
Yes, I heard about this. Tell us more. Adam, I think you were the one that told me about my cell phone.
Oh, I probably was. Let me pull it up here so I can share the screen with you.
Share the great news with everybody, because you can add that to your credit report. Yes, indeed. I've done it. I followed the instructions as soon as I received them. So thank you for that.
Okay, let me close out some of this other stuff here.
So you've heard a couple of tips so far, and Adam's going to pull that up so he can show it to you. But you've heard a couple of tips on how you can immediately take steps to improving your credit. And now Adam is actually going to show us about Experian Boost and give us more information.
All right, Shanetta, can you see the screen here? Are you able to see?
I can, yes.
Okay. So what the Experian Boost program does is it gives you credit for things like your cell phone bill, utility bills, things that you pay on a regular basis already. It gives you credit on your credit report for them. Now, it's not going to be a massive increase to your credit report, but it is small increases to your credit report that happen every month over a long period of time. And that's exactly what you want to happen. Now, the only downside to this is it's only available for Experian. It's not, there are actually 3 credit reporting agencies that we use: TransUnion, Experian, and why did I just
Equifax.
Thank you, Equifax. Also forgot it for some reason. Experian, Equifax, and TransUnion are the 3 that we use. This will only impact Experian. Okay, so it's not going to affect all of the scores, but since we use the middle score as the qualifier, this at least will raise one of them to try to give you a little better ceiling on it.
Adam, can you speak about that just a little bit so people understand what you mean when you say that middle score?
Sure. Whenever you apply for a mortgage, everyone pulls credit a little differently. Okay, so when you go to apply for a credit card, or you go to apply or buy a car and get a car loan, generally they're only going to pull a single credit report. Whichever agency they happen to use, they're going to pull a single report. When you go to do a mortgage, we pull what's called a tri-merge credit report. Okay, so what that means is that we pull reports from all 3 agencies, and then we take the middle score. So if TransUnion has you at 750, Equifax has you at 740, and Experian has you at 730, we're going to go at 740 because that's that middle score. So the more we can bring those scores up, obviously the higher that middle score should be. But yeah, it's not necessarily an average, but we take, of those 3 scores, we will take the middle score to use to qualify you for the loan.
That's good stuff. So a lot of times when you're looking at your credit scores and you're saying, okay, well, I cleaned this one up, but it's still, over on another report. What Adam was speaking about when we're talking about how to take the steps yourself to clean your report up is we have access, especially here in Maryland. I think it's different in different states, from what I understand, that you can order your credit report from all three agencies yearly, and it's free. And
Yes.
so you can do that. And then everybody uses Credit Karma, of course. And Credit Karma is, I utilize that. I like Credit Karma. I'm not advertising. I'm not a spokesperson. I'm not, saying that should use it. For me, it has been successful because it gives you those alerts and it allows you to see what's happening in real time.
One thing I will, let me jump in here real quick though, because Credit Karma can be a little bit of a double-edged sword sometimes.
Okay.
Using it for the alerts and monitoring and identity theft, that's great. Credit Karma does a great job with that. When it comes to the score is not always accurate because their models are a little bit different than the way it gets pulled in real life. There are some things that they don't take into account. If a debt is more than 2 years old, but less than 3, a lot of times Credit Karma doesn't take it into account in their scoring model, but we do.
Wow.
Because the debt has not dropped off at that point, but it's dropping out of their scoring model. So I have seen Credit Karma be off by as much as 100 points. So
that's good, Adam.
That is keep that in mind.
That is good. Now we had a client recently, and we ran her credit report, and we weren't able to approve them for a home. And they're like, well, Shanetta, here's my Credit Karma right here. Right. But I never understood that component. That's just like with Zillow, where if they don't give you real information, and typically if you're like, well, I saw it on Zillow, I got a Zestimate. It's like, well, you left money on the table, dear heart, if you're selling your home. And so we had opportunity to help you capture all of that. So that is good information to understand. And I think that I wanted to really start with the credit because that is the first step in getting things in order to purchase a home. Would you not agree?
Oh, absolutely. Actually, I'll pull up our little roadmap here for us again.
Yay, we got a roadmap to home ownership. We're going to share it with you all and you're going to love it. And then, so I'm available. I am licensed in Maryland and DC to help you purchase your home. Adam, what areas are you able to help with financing? Is it Maryland, DC, and Virginia? Or
yeah, I can take care of anywhere you can cover. So if we got if it's Maryland, PA, Virginia, DC, Delaware, whatever, we got it covered.
Awesome. Now, Adam, do you focus primarily on residential? I know we spoke about commercial, and that's not an area. So if they needed a commercial lender, because we have some people, and I want us to talk about that at a separate workshop, but there's a difference. So some people feel as though they want to purchase a home and purchase it in the company's name. Would they still look at residential financing, or are they now still looking at commercial financing?
You'd be looking at commercial usually at that point. Usually, typically to buy a home, you're going to have it titled in a sole, in an owner's name. Generally, you're not going to be able to close on with an LLC with standard financing. That usually has to be tied to a personal credit report. There are still ways, of course, to finance it that way. It's just a slightly different process. What I deal with is strictly residential financing. That's my sole focus is residential. I don't deal with commercial at all. I don't deal with, I want to deal solely with homeowners that are purchasing homes.
That's
so awesome. That is the what I focus on the most.
And then Adam, so even if a homeowner is purchasing a home as their personal residence and or investment property, as long as it's for that particular homeowner and it's not in a business name, you can help, yes?
Oh yeah, absolutely. Oh yeah, investment properties are fine. Second homes, vacation homes, that's a little bit different. Yeah, the commercial, you're usually talking about, mixed use space where the majority of it is for commercial use. Think like a mechanic's garage with a tiny apartment above it or something. That would be more like a commercial loan because the residential space is much smaller than the commercial space. But residential does cover investment properties, second homes, and vacation homes, as well as primary residence.
So you don't just have to do it one time, you can do it a couple of times.
And that's a fantastic way to build wealth.
And retirement, right?
Oh, absolutely. Absolutely.
We're going to talk about that in another one of our workshops in regards to wealth building and preparing for retirement with real estate, because this is another area that I found out about later on. And sometimes you wonder why individuals own 2 and 3 homes. Well, at the time of retirement, or if anything comes up, they have the option. If you have $1 million home, a $700,000 home, even a $500,000 home, that is used as collateral for your retirement. So you could always put it on the market and be at ease. So
Right. So yeah, you can either use that as an income generating property or sell it for a capital gain. But I'm sorry, you had also asked me about, you'd said about the importance of the credit score and getting it done up front.
yeah.
In this environment right now, it's not even optional. It's critical. You cannot go out there and shop for homes without a pre-qual,
Say that
because
one more time, Adam. One more time, Adam. Say it one more time.
you cannot get out there and shop for homes without a pre-qualification, because there would be absolutely no point. With how quickly homes are turning right now, with how quickly the market is moving, by the time you see a home, if you actually then have to go get a pre-qual to submit your offer, that home is gone.
And agents, as for, for real estate agents, a lot of us do not go take clients out. And you'll hear a lot of agents tell you, are you pre-qualified? They ask those questions. And so we also ask, for myself, I ask, are you an A, B, or C buyer? And the A buyers are ready to rock and roll. Now you have your pre-qualifications, you're ready to rock and roll. B, you're preparing. So you haven't gotten pre-qualified, you're interested in getting pre-qualified, you know what's necessary. You may not have a loan officer. So your realtor may not have somebody they referred you to. You may not have a title company to work with, but that's what we do. I provide all those recommendations for you. You do not have to utilize them, but I'm only going to recommend those that I know that I've worked with, that I know that are dedicated to meeting your needs as the buyer. And we're looking for your best interest and want to give you some transparent and some true information, so it doesn't seem so complicated. We want to make it easy for you, comfortable for you, but let you become knowledgeable so that you can help the other individuals in your family.
And that is a very, very good point there too, about how many people are involved in this transaction to sort of help you along. Because like you said at the very beginning here, nobody really goes into knowing about a mortgage initially. Nobody studies mortgage before they ever go into
Not even agents. Not even agents.
No, a lot of real estate agents know even less about loans than you do,
Exactly.
as a buyer. But that certainly happens. But that's why you have the people helping you in this transaction that you do. Okay, you've got Shanetta on the real estate side to make sure that you're seeing good properties. There's not going to be any issues with those. You're getting the inspections you need. She's watching out for you on that side. You've got myself as a loan officer watching out for you on the financial side to guide you through the process, help you understand the process, make sure that you're getting the best deal possible. And then you've got the title company that we work with on a regular basis, whose job is going to be to make sure that closing goes smoothly. Do they offer online closing? When you're looking at title companies, that's an important question these days. But we're generally going to guide you to people that are going to provide the best service possible for you in the transaction, and people that we know that we've worked with and have provided good service in the past. So it's great to work with a team when you've got people that work together like that.
And Adam and I work together like that. I also want to say thank you to Matthew. So that's a Gemini title. I love Matthew.
Oh, Gemini's great.
Yeah, Matthew's amazing. So that's our team. So you pretty much now know who is on our team that is going to really push to make sure that things are explained, things are handled with, I would say, care. And then we are going to be responsive. So one of the biggest things that I know a lot of clients always hate is their real estate agents not responding to them. Or a lot of us as individuals in a whole don't like waiting for information. Adam has me beat. I thought I responded to everything quickly. Adam, hands down, you got me beat, King. So we do take breaks. We do have families. So we do have office hours, and we do actively schedule appointments. But if there's something that is pressing, then you can definitely reach out to us, and we'll be here for you. So I know for myself, you will not wait more than 24 hours to hear back from me on anything, because I don't like to wait. So Adam, how about your turnaround? And except on the weekends, if you reach out to me on a Saturday or Sunday, you may not hear from me till Monday.
Well, see, generally speaking, since I'm kind of on the first step in most of these processes, I generally work 7 days a week. I'm available from 9 a.m. to 9 p.m. every day.
He is. He really is.
So yeah, that's 9 a.m. to 9 p.m. to give me a call. As far as text messages and emails, I respond to those until I crash out at night. So I mean, sometimes that could be 1 or 2 o'clock in the morning.
I think we were emailing last night about 10:30, huh, Adam?
Yep. And I was finishing up a pre-qual last night for someone to submit an offer today at 1:30 last night. So
Amazing. And so I think that that's important while we're doing this the road to home ownership. It's important to help individuals understand, and you had just touched on that in regard to why that pre-qualification is important, because a person can go out and look at a home, fall in love with it, say, Shanetta, I love this home. I want to put an offer on it. I want to put a contract on it, but they don't have the financing. And so they don't understand that, okay, when I go back in a week, and I want you to talk about this, how long it takes to get a person pre-qualified. We talked about the extreme, but that's when you helping somebody to prepare and get ready and fix the credit. The person that may have that 620 credit score ready and is ready to move forward, how fast can this process take if they followed our guideline? And we're going to talk about it step by step. What's a general area that they should look at and consider?
Well, let's say, assuming that we have to do a full underwrite on it. So let me back up here and explain that there are really two different ways that I do a pre-qual or a pre-approval. If a deal looks relatively tight, okay, so meaning it's right on the edge of qualifying, maybe the debt is fairly high, or maybe the loan to value is a little higher than we would want it to be, or wasn't able to be where we want it to be, that's one that would actually have to go through a full underwrite, or at least a pre-qualification underwrite, I should say. It's a little bit more limited, but that would be a situation where we would submit the application, but you would also be submitting things like your W-2s, your bank statements, and pay stubs. That is an actual documented pre-approval.
Wait a minute, Adam. I'm self-employed. What do I do?
Well, self-employed borrowers are a little bit different. We're going to have, for self-employed borrowers, you're going to generally use one of a couple different things. You're going to have your full tax returns. So instead of just W-2s, you'd be submitting the full returns for those years. You would also be submitting, if you happen to own a business, either your S Corp forms or your Schedule Ks. Okay, those are part of your tax returns if you're a business owner. If you're a self-employed contractor, you'd be submitting things like 1099s. So there's various documentation that you would use to go along with that. And as a matter of fact, one of the pages that I have in my prospective buyer's guide is a list of documentation that you would need for it.
So there's a guide too, Adam. So you have a guide to make this all nice and easy for everybody.
Yeah, let me see if I can pull the checklist up.
Awesome sauce.
And let's see, you are, whoops, that's all right. Are you still able to see that?
I can't see it, not right now, no.
Okay, hold on one second, I got it.
So this is so exciting. So where you're getting the behind the scenes, and you're going to really get the truth and what happens. So Adam just pulled up the loan documentation for those that have called in and those that have joined us. If you're on Facebook, I know you can see this, but to get a copy of this, you'll have Adam's contact information as well as my contact information in the replay of this. This will be available for everyone, and you'll be able to look at this on YouTube as well. Please share it with your friends and family. And if there's additional questions that come about, if you're logged into the Zoom, there's a Q&A, so you're welcome to put your questions there. If you are on Facebook or on Instagram, please leave your questions and we will respond to them shortly after this recording and seminar today. So Adam, I'll turn it back over to you.
Yeah, and let me jump back in there too. You're talking about the time frame on these. So the difference between that pre-approval and pre-qualification. Okay, so this is what we were just talking about. There is a fully documented pre-approval where we've looked at all the documentation for it and had to submit it to underwriting. The other version that I can do is, sometimes when somebody applies, you can tell just the deal is going to work. It's so far within the limits. They're so well qualified, it really would almost be impossible for it not to work. So in those instances, I'll still review the documentation, but I'm not going to submit it. I'm not going to fully submit that to underwriting because I already know that it's going to work based on the parameters that I have. So that version I can turn around fairly quickly. Generally speaking, from the time that somebody does an application to the point that I can issue a pre-qual, as long as it is, again, a simple one like that and doesn't require the full underwrite, that's a 24-hour turn time.
Awesome.
If I have to get it fully underwritten, now we're talking 48 to 72 hours minimum.
That's still less than a week.
Still less than a week, but think about that. If you've taken a day to go see that house, then you take a day to reach out to the loan officer, then we take a day to get the app in and 3 days to get it reviewed. You're at 6 or 7 days at that point. Is that house?
That house is already gone. We're going to have to find a new one.
Exactly. So that's why it is so critically important to get the pre-qualification done ahead of time, because otherwise you're just guaranteeing yourself heartbreak, and that's not a great way to shop for homes.
So make sure if you like this loan documentation, again, please reach out to Adam and or myself, and we will be dropping these on all social media platforms. Please follow the PMs of the City on IG, on Instagram, as well as on Facebook. You can follow myself, Shanetta Malkia, on Instagram, Facebook, and LinkedIn, as well as Twitter. All of this information will again be shared, and it'll be saved for you to do the full replay. And we just heard 7 days that it could take us the standard if everything is in order and it's a smooth sailing. It can take 7 days. It could also take 1.5 years, depending on where you are in your credit. But we've given you some tools and some tips on how to build your credit up, what you should look for and consider if you're thinking about working with debt management companies, and some of the things you can do yourself to better your credit score. So now what I would like us to do, Adam, if we can, and Adam, if you want to touch base on some of these things. So Adam just gave you some ideas. So your income, your assets, your credit. We talk about the importance of the credit and how that's evaluated, that middle score, how those things affect your process. So if we take the time and become familiar with this process and the things that are necessary, and we're going to help you, Adam, myself, and Matthew, that's my title guy, we will help you make life easier. So Adam, before we jump into the next area, another area that has kind of made people hesitant in purchasing homes is income.
So, yeah, I mean, income, that's a pretty simple formula, actually. Every loan product that we have, whether it be a conventional loan product, FHA, VA, whatever it happens to be, they're all going to have their limits as to how much of your income can go toward your housing payment and any trade line payments. Okay, so your credit cards, your car payments, so on and so forth. Every loan program is going to have different parameters to how much of your income can go toward that. FHA, you're going to see it a little bit higher, in the more of the 47, 48 range. VA, you're going to see can go a little higher in the 48, 49. Government loans are generally going to be a little bit more lenient as far as that goes. Now, conventional loans, we'd be looking at a little bit lower. Okay, so generally you're going to top out there around 43 to 44. Now, it's not to say that it can't be done a little higher, but beyond that, we need to start looking at what's called a manual underwrite to see if we have some things that we could, that will allow us to get around issues. But again, that's something that would take a little bit of time. That's not an instant type of thing that we can do.
So Adam, if a person only makes $35,000 a year, can they purchase a home?
Absolutely.
If a person only makes $30,000 a year, can they still purchase a home?
Yep.
So the income level, because a lot of people say, well, I don't make a lot of money, I can't buy a home. I've heard from so many different people, and they say, well, I don't know what kind of home I got. Am I going to get a shack in the woods? It's only going to have a half of a door. What am I walking into? And I only make $30,000 a year.
Right, and that really is going to depend on where you're looking. It's going to depend on what your needs are. Because really, what the full statement should be: I only make $35,000 a year. I can't buy a $500,000 home.
Tell the truth.
Yeah, that should really be the full statement, because you can absolutely buy a home. It's just a matter of where and how much of your income is currently being taken up by car payments, credit card payments, etc. The less debt you have overall, the higher your buying power is going to be. There's also one thing that comes into play a lot is going to be real estate taxes.
Yes.
Where you buy your home can be very, very critical. For example, kind of out near me here in Frederick County, up in northwestern Maryland here, if you live within Frederick County, let's say we're going to round these up, your real estate taxes would be about 1%. If you live within the city limits of Frederick, it triples. It goes to over 3%. So where you buy your home can have a massive impact on how much you can qualify for. How much of your payment is going toward taxes? How much of your payment is going towards homeowners associations or, God forbid, condos?
Yes.
The condo fees can be huge. And those are the things that, when you see those payments on Zillow, those are the things that aren't being taken into account a lot of times.
Mhm.
So when you go, why is my payment $700 higher with you guys? I was like, well, because they didn't include half the stuff.
Okay, and the condo fee that you wanted for that beautiful condo were $1,000 a month. So
Yeah, I mean, I've seen them as high, you know, 550, 600 a month.
and
Absolutely.
that's it. That's on top of the mortgage, kings and queens.
Oh yeah,
Top of the mortgage.
on top of your principal, on top of your interest, on top of your homeowner's insurance, on top of your taxes, everything
A
else.
lot.
The condos, yeah, the condo fees can take a bite, no doubt.
That's good. So now, Adam, now we've talked to them about the first step, the importance of having the credit. We've talked to them about the importance of having that pre-qualification. We've given some real time frames on the short end and the long end of things. Let's take them back to our homeowner roadmap and give them the next step that they need that you feel is essential and important in this process.
Oh, a little technical difficulty here.
No worries, that's fine. So listen, so the things that we want to know, and I want to know as your realtor, I want to know exactly what you're looking for. So I want to help you find the home of your dream. I don't want you to pay too much for it. And I'm going to just make sure that everything is handled with ease so that you can relax and really enjoy this process. So when you're working with a realtor after you're pre-qualified, some of the things that we're going to do is we're going to sit there and talk to you, because some people say, well, 72% of homeowners say they didn't like their agent. The one that they chose, you chose this agent to represent you, but they didn't like them. And a lot of people say, well, Shanetta, well, why didn't they like them? Well, I asked you that question, but we've asked quite a few clients, and what we found is that agents just don't show you the properties. We found that they don't meet your needs. They try to upsell you on higher price options that you don't need, or properties. They may not show you all the previews that you want to see. You're waiting to find a home. You haven't heard from your agent, and they just don't communicate.
Now, one thing you talked about there that I would definitely want to jump in and refer to is there's another sort of a misconception about the loan industry, and that is the way that loan officers get paid.
Yes.
Because a lot of times in days gone by, it used to be that we could include things like what was called overage. Okay, so you know, if we could charge a higher rate, we'd get, you know, we could charge that to the borrower, and we would actually make that money. Okay, so we could make money on the borrower by charging them a higher rate. Okay, now that is not something that's able to be done anymore. Okay, that ability has been taken away. So whenever you're dealing with a loan officer, keep in mind that their income is not driven by, if they do rate buy downs or things like that, they're not getting paid on the overage. There is no way to sort of work in fees to try to get you to pay those. Okay, that's something that was happening in the past. You know, you're talking about, you know, before the big housing collapse, one of the issues they were dealing with, and it was, you know, there were a lot of discrimination suits about it and things like that. So that ability has been removed. Okay, we do not get paid on the overage on these. Okay, so if anything, if we're ever structuring a deal and I suggest buying down a rate or something like that, it's always because it's in your best interest.
That's always that's a good thing. And so a lot of times, a lot of people are concerned about that and how we make our money, even as realtors. And a lot of people say, I don't want to work with a realtor. But the purpose of working with a realtor is because we have access and we have tools to help you protect you. So we have the knowledge, we have the skill sets, we know the market, we can narrow down the market for you so you're not looking all over the place. We can give you the tools that are necessary to help you negotiate. Sometimes realtors take a long time. I know we give you the details. I know we're just recently looked at it. It takes about 56 days for an average realtor to find a client a home. I take 7. And the reason that I take 7 is because I take the time when I first meet with clients to understand their true needs. I like to deal with the realistic expectations in regard to, are you pre-qualified? Have you met and spoken with the loan officer? Do you know what's necessary? If you are pre-qualified for a home, pre-qualified to purchase a home at $150,000, I'm not showing you a home that's cost $150,000. We want to stay $10,000 less than what you're at. We don't need to take you to your max, because we want to make sure that this is reasonable and affordable for you. And a lot of times before, I know people were losing their homes because they just went in and was able to do this whole state your income and you were approved. I'm so thankful that that's gone. I'm so thankful that's gone.
Yeah,
and
we could literally make up whatever numbers we wanted. That was
just tell them about this. So it messed people up. So you literally could state your income and they give you a loan for it, and then you get in there and you can't afford it. And so now life happens and you're going through these shambles. So we got to be realistic. We have to understand what our income is. We want to listen to the recommendations from our loan officers, take that important information and apply it so that you're successful and it doesn't have to be so trying. So Adam, I'll turn it back over to you. Where are we at now on our
Well,
roadmap?
I was going to say one of the things here too that throughout this entire process, it is important to work with professionals that actually know what they're doing, for one, but work with somebody that's going to help you reach that goal that you have in mind. Okay, we can get steered in all kinds of different directions when you start looking at homes. Okay, you might go into this thinking, I want 3 bedrooms, 2.5 baths, so on and so forth, but it's very easy to get blown away by the sticker, by the shiny, bright, oh,
I want that car in the window.
Right. So, oh, well, I only wanted to spend 320, but Adam said I could do 350. Let's do 350. Just because that is the max limit doesn't always mean we need to go that high.
Adam, you said that they can spend 350 if they
right.
can't.
But the one thing is, loan officers are all going to approach this a little bit differently. I generally tend to approach every transaction as I want to do what's in the best interest of the clients, not necessarily the most they can get away with.
There we go.
I don't want to go for the highest loan amount we can possibly get. I want to make sure that whatever they're getting is going to fit comfortably within their lives without stressing them to the point of breaking. So sometimes the max that you can qualify for might not be in your best interest, but that is one of those things that you want to cover with a loan officer when you're talking to them. You want to make sure that it's in your best interest, not necessarily if you stretch yourself as thin as possible, what can you afford?
That's good. That's really good. So we're not going to take it. Well, I'm not going to take you to your max as your agent. Adam is going to give you some realistic numbers as your loan officer. And I know Matthew got you covered. So reach out to our team today. Let us be of service. Where are we going next, Adam? We got about 15 minutes. We got 10 minutes left so we can make sure we don't keep everybody all afternoon. So we thank you so much for joining us. We are going to bring you some more workshops just like this and talk about some other avenues, but we wanted to make sure you understood the basic steps because it's not as scary as people make it seem. And you can really go through this process with ease, with some help.
Yeah, really. I mean, if you really break it down from the point that you apply for the loan, the online application process takes 15 minutes or so, maybe another 10 or so to upload the documentation. But really from there, you're going to be with either myself or with Shanetta the entire time during this process. So, you'll have that initial application and stuff that you're doing on your own. But even then, you can still ask questions, find out if you need anything, we can help get you through that. But beyond that initial application, we're going to be going through every step together. You're always going to be able to have your questions answered. We're not going to move forward until you understand everything.
Say that one more time, Adam. That's important. I just had this conversation with somebody. I said, people talk at you and talk to you, but if you're not retaining the information, what was the point?
Right. I want to make sure that I would much rather answer 100 questions than have to fix an issue. I want to make sure, I always make sure that people understand 100% before we move forward with anything. It doesn't take any effort to just answer some more questions and make sure that everybody's on the same page so that we're not getting to closing going, why did this happen? We're going to understand everything from the very beginning.
That's good. So Adam, we have about 8 minutes. What are some key points that we want to leave our guests with today?
Well, I'll tell you one major key point that we want to make sure that everybody understands is exactly how historic our rate environment is currently. Literally, we have never, ever seen rates this low. I've been in the industry since right around 2000. So I've got a number of years behind me. I'm sure you've been in the industry a number of years.
Yes.
Have you ever seen anything like this?
I have not, but I'm at awe. Sometimes it's too good to be true, but I'm just going to relax. That's why I'm starting. That's why I'm going through my process now. I want these low interest rates. I want the low interest rate. People are buying right. People are still buying in COVID.
Oh God, absolutely. I mean, honestly, we were averaging, let's say 10 to 15 closings per day for our closing department would prep, 10 to 15 packages. Recently, they've had to prepare as many as 80 to 90 in a day.
That's good. This is good. I love it.
People are still buying homes left and right. The average time on the market is what? How long?
Well, so the average time on the market, it's for Maryland based on GCAR, it's still about 90 days. If you're working with a realtor such as myself, I'm not going to have it on the market for more than 30 days, but that's all changing about the pricing and things of that nature.
Sure.
Sometimes people are always listing properties at the max because the market says this. Well, I am going to, for myself, one of the tactics that I use is I list you a little bit lower, but I have your house sold.
Well,
And so,
let me rephrase that then.
okay.
How long are houses staying on the market when they're properly priced and have a good pricing strategy?
Yeah, okay, there you go. I like that. So it can happen within 2 or 3 days. It can happen in 7 days. I've seen a house literally go on the market on a Friday and it's got a ratified contract on it by Sunday.
Right. So people are absolutely still buying houses, and
And
people
they
are.
have cash buyers that are buying as well. So keep that
Oh,
in
well,
mind.
yeah,
You're filling it with your cash buyers.
gotcha. Yeah, obviously, I never see that side of it. So,
Yeah. So
um,
we got people that are bumpy. That's why I always tell my clients, I need you pre-qualified because if I go show you a home and it's a person right behind us that has 200,000, they're ready to cash buy. It's this business. We love
oh
you.
yeah.
We want you to have the home, but it's business.
Well, cash is king. I mean, that's tough to get around a cash deal, but
Yes.
yeah, but no, I'm. This is absolutely serious. The rates literally have never been this low. I literally just locked in a conventional loan,
A conventional.
conventional at 2.5%.
So wait. 2.5%.
2.5%.
Now, what type of credit score does that look like at 2.5%?
I mean, I think that one it was probably mid sevens. I think that was a little over 740, somewhere in there.
Okay.
And then that was also with a half a point.
Really?
Yeah.
So Adam, you working some magic over here. We always say we make it look like magic. You over here just making magic.
Well, there's all sorts of ways that we can get around. If we need to like have a lower monthly payment, but you've got more cash, maybe we can look at buying out the mortgage insurance. A lot of times buying out that mortgage insurance premium can be a great way to lower your payment a couple $100 a month. We can do things like, or it's like if you need some help with closing costs, we can increase the sales price a little bit, have that returned as a seller credit. We can work things in with points here and there or lender credits. Maybe we can increase the rate to give you a credit a little bit. There's all kinds of financial kung fu that we can do on these loans.
I love it. Financial kung fu.
It's not one size fits all. Every loan is a little bit different. So we're going to find a setup and a version of this that looks perfect for you. That's the goal.
So thank you so much. Adam, I want you to tell everybody how to reach you. I'm Shanetta Malkia with the PMs of the City and Yalubio Realty. We thank everybody for tuning in for our first Home Buyers Workshop 101. So we take you from the beginning to the middle stage until we go to settlement and you get some keys, say welcome home. So this is amazing. So you can reach myself at thepmsofthecity.com. You can reach out to me via phone, 202-991-9833. You can also email me, smalkia@thepmsofthecity.com. Yalubio Realty, we are the primary builders of the container homes and the tiny homes in DC. So please visit yalubioinc.com, and Gabrielle and myself will look forward to showing you some other options. So in DC, literally you have some homes that are about 75,000 up to 125,000. They're container homes and they're tiny homes, and we put them together in 90 days.
I want to see a couple of those. Yeah,
you got to go to with Adam. When you see it, first of all, I'm talking about not just a regular, I'm talking about homes with decks.
Oh yeah,
it's
beautiful things they can do with those. They can do beautiful stuff with those.
And then if you're also looking to make some additional income, so if you have 2,000 square feet and you can do this in your backyard, hey.
You're talking about it as an ADU, right?
Yeah, ADU units. So you have that option also. So there's so much that can happen. But we are excited to bring that to you. Adam, I'm going to turn it over to you. Adam's information is on the screen for you, so you do not have to miss a beat. Call or text him. Remember, he's 7 days a week. He will get it done for you. And I just ask that you believe in the process and to believe that you can own a home.
Absolutely. We will get you there. There is a way to get you into a home. There is a way to get you into home ownership. We will figure out a way to do it.
So Adam's promise is that he can either get you pre-qualified or tell you what you need to do. I'm going to say after you meet with Adam and he gets you pre-qualified, I'm going to gladly tell you exactly what I can do and show you within 7 days in finding your dream home. I'm sure you would appreciate that. We're going to get you the best price. Adam's going to get you the best interest rate, going to give you some realistic information, and we are going to be here to be of service to you.
And my rates are good.
His rates are, you heard that, 2.2. Listen, 2.2, that's amazing. That's not
My
good.
rates
That's
are good.
damn good.
Whether you're purchasing or refinancing, my rates are good.
That is amazing. So you heard that. We didn't even talk about that. So that's another avenue if you have to refinance. So I'm sure Adam has some resources on refinancing. If you need to have refinancing, please reach out to Adam. And for all of your sales and your purchases, please reach out to myself. I help buyers and I help you sell your home. And I help you rent homes. And we come out and we make sure that everything is comfortable. It makes sense. It is reasonable. And we make it look like magic. So
Plus, you're amazing and you're driven. I love working with you.
I love working with you, King. I thank you so much, Adam, for joining us this Saturday and doing this. We are actually have another workshop that's coming up this Wednesday, specifically for agents. And we're going to do that. If you have not registered for that yet, please visit Eventbrite and please visit thepmsofthecity.com. You may see the event on our website, but you'll also see the event on our Facebook page. You can click right there and go ahead and register. That is for agents. So I am a new real estate agent. I've been in property management for over 21 years now. And I went into real estate 2 years ago. And when I first went into real estate, I kept hearing brokers say that not everybody likes to work with the newbies, they'll call us. But I realized that they don't give a lot of the training that are necessary to help you help your clients. A lot of times I feel that we are missing some of the basics. And so we are now going to make things simplified because I believe as an agent, we should understand some of the basic components of what our clients are going through the mortgage process. I think that, it's important. Adam, how important is what you say? Would you want an agent that knows a little bit about if that was your client, if you were, a new buyer, do you want your agent to understand exactly what you're going to be facing?
Oh, absolutely. And really the goal of this upcoming training class is going to be to give you enough knowledge to be able to start the conversation. Okay. I don't want to give you everything in the world and overload you with a ton of information because you don't want to dive that deep into the mortgage side of it.
No.
You're not trying to originate a loan, but you do want to have enough information to be able to speak coherently and competently about the loan process and mortgage process. So that's what this training class is really designed for. I want to be able to give you the basic information to have those conversations, be able to answer some of the questions and understand how some of the loan mechanics work. Like we said at sort of the very beginning, the mortgage and loan process can sometimes be like learning another language.
Yes.
So we're doing a sort of a light crash course. That's the sort of the beginner loan process with a little intermediate information, but enough to make you competent, but not dangerous.
There we go. Confident, but not dangerous. And I'm already confident, so don't make me dangerous. I'm going to stay in my lane, real estate and property management, and I'm just going to make sure that we have all the tools that are important to help you be successful, because these are things that just weren't shared with me at an earlier time, and I'm thankful to be able to share them with you. You don't have to wait until you're in your 30s, your 40s, your 50s to buy a home. You can buy a home at 18 years old, So no matter what, Adam can help you and I can help you, and we want to make it look like magic. So that concludes our home buyers seminar today. We thank you for tuning in with us. Adam, thank you so much for your time this afternoon. It's been a pleasure. It always is.
Absolutely. Happy to do it.
Always see everybody back on Wednesday. Well, the agents, we'll see the agents back on Wednesday, and then we'll see all of our new buyers that need some assistance and are ready to move forward. We'll see you in person and via email so that we can help you buy your home. Thank you so much.
Thank you much. You have a good one.
Have a great one, Adam.